All right, let's get straight into it. If you are an accountancy student here in the Philippines grinding for your exams, you already know that individual income taxation is an absolute beast. Today, we are zeroing in on a massive, high-yield topic that examiners absolutely love to test, the 8% income tax option. We're going to break this down so it actually makes sense, and more importantly, so it sticks in your brain for the boards.
So, quick question before we really get going. Do you actually know the 8% rule inside and out? Seriously, ask yourself right now. Because we aren't just going to sit here and passively read notes today. The goal here is to literally hardwire this stuff into your memory for the next 3 years, straight through your tax classes, and right into the LCPA.
Here is your cognitive roadmap for this session. We are going to hack the 8% tax option, figure out exactly who gets blocked using the protect and mnemonic, break down the 250K exemption rule, navigate the mixed income trap, discuss the point of no return, and then wrap it all up with a rapid-fire bullet review.
Okay, Section 1. Let's hack the 8% tax option itself. Think of this option as a total game changer. It basically replaces both the graduated income tax and the 3% percentage tax, completely simplifying the math. It's an optional flat tax rate, and it is based purely on your gross sales or receipts plus any non-operating income. Prior to the train law, you'd be stressing over calculating your regular income tax, and then you'd have to figure out a 3% percentage tax on top of that. Now, you literally just blast an 8% flat rate on your base, and boom, you are done.
But here is a massive red flag for the boards. You really need to catch this. This option is a playground exclusively for individuals. We're talking purely self-employed folks, professionals, and mixed income earners. Corporations, partnerships, they are completely barred from using this. Examiners love to throw that in as a distractor, so definitely do not fall for it. Moving right along to Section 2, who actually gets blocked from using this option?
You know, the human brain absolutely loves acronyms. It's the best way to prevent cognitive overload during an exam. So, whenever a multiple-choice question asks, who cannot avail of the 8% rate, I want you to immediately think of our cognitive anchor, the word protect. Go ahead and jot that down. Let's lock this list into your memory. P stands for Partners of General Professional Partnerships because their distributive share is already net of costs. R is for anyone whose registration is VAT-registered. O means they're subject to other percentage taxes aside from Section 116. T is for those lucky folks enjoying tax exemptions, like BMBEs. E means they are a purely compensation income earner, meaning they only have a regular day job and are locked into those graduated rates. Finally, C/T stands for the threshold. Anyone whose gross sales cross the 3 million peso mark is instantly blocked. Say it out loud to yourself right now. Protect.
All right, Section 3, we are talking about the 250K exemption rule.
250,000 pesos. Make this number your absolute best friend because it is central to computing the 8% tax correctly. Here is how it works. If you are purely self-employed, meaning this is your only source of income, you actually get to slice off this 250,000 pesos from your gross sales and non-operating income before you ever multiply by 8%. It significantly lowers your tax base. So the formula is super straightforward. Take your gross sales plus non-operating income, subtract 250,000, and then multiply that whole thing by 8%. Make sure you keep that specific scenario locked in.
Now for Section 4. Let's dig into the mixed income trap. This is literally the #1 trap examiners will try to catch you in. We are comparing the purely self-employed versus mixed income earners, or MIEs. As we just learned, the purely self-employed person gets that 250,000 peso deduction against their business income. But the mixed income earner? Nope, they do not get the 250,000 deduction against their business income under the 8% regime. Zero deduction.
Now, you might be wondering, why the harsh treatment? Well, it's actually fair. The government isn't going to give you a double deduction. Your first 250,000 pesos of exemption is already fully shielded within the graduated tax rates applied to your day job salary, your compensation income. Giving you that same deduction again on your side hustle's business income would be doubling up, and the BIR is definitely not letting that happen.
To process this cognitively so you don't panic on the exam, just visualize the computation in 2 totally distinct steps. Step 1. You compute the tax on the regular salary using the graduated table. That is exactly where your 250K exemption lives. Step 2. You separately blast the entire business gross sales and non-operating income with a straight 8%. Do not, under any circumstances, subtract 250K in Step 2. That right there is how you survive the trap.
Okay, moving to Section 5, the point of no return.
When it comes to this option, timing is quite literally everything. You cannot just wait to see how much money you make and then decide to use the 8% option at the end of the year when you're filing your annual return. You must legally signify your choice right at the very beginning of the year, specifically during your first quarter income tax return or your first quarter percentage tax return.
Check out this exact super strict phrasing straight from the tax code. Such election shall be irrevocable. The boards love to test your understanding of that specific word.
Basically, if you check that box in quarter 1, you are locked into the 8% regime for the rest of the year. It does not matter how your business performs. If your operating expenses suddenly skyrocket in August and you wish you could claim them as itemized deductions under the graduated rates, well, too bad. You can't. It is a massive strategic choice, and for that taxable year, there is absolutely no going back.
All right, Section 6. Time for our final LECPA bullet review. Get ready to take a mental picture, or honestly, just grab an actual screenshot of the next slide. Keep your study notes on a plain white background, just like this, to minimize visual clutter, and make sure you review it tomorrow, then next week, and then next month using spaced repetition. That is the secret cheat code to guarantee this stays in your long-term memory for the boards.
Here is the entire topic stripped down to the bare, highly testable facts. Availability. Individuals only. No corporations, no GPPs. Who's blocked? Remember the protect mnemonic. The math, pure self-employed gets to deduct the $250K from gross before applying the 8%. Mixed income earners get zero deduction on their business gross. Procedurally, you got to file in the first quarter ITR, and the golden rule is that it's strictly irrevocable for the year. This right here is your ultimate high-yield study guide for this entire subtopic. Before we wrap up, I'm leaving you with this final active recall trap to test if your brain successfully encoded today's session. Look closely at the question. Do they multiply 750K or the full 1 million by 8%? If you remember the mixed income trap we just talked about, you know for a fact it's the full 1 million. Make sure that concept is completely hardwired. Keep optimizing your study sessions, trust the process, and keep hacking the tax code. You've got this.